Hey y'all, Jen Hernandez, Loan with Jen. So today we are going to talk about you're in your 20s and you're just starting out, you're newly graduated or going to graduate and you're wondering how do I qualify for a house? So stay tuned, we're going to go through some simple highlights of what to start focusing on so you can buy your next house soon. Okay, we're back. So the main things we're going to talk about today are just three simple things. We're going to talk about credit, we're going to talk about job or work history, or lack thereof, or an abundance of, because you're in your 20s, so you don't have that much history going on. And then we're going to talk about savings. Okay, we're going to talk about money. So the first thing, credit, that's the number one entry point into loans. So make sure that you've got good credit. So to do that, maybe you're just now starting to develop your credit. The very best website that I really super like is myfico.com, myfico.com. Lots of good information. I'm just going to put some real short snippets here, and also make sure you watch my video on credit myths and truths, and you can find out more there. But basically, you do need to have a credit score. So if you don't have any credit, it takes 6 months exactly. So from your very first card, whether it's a Cons or some type of credit card, you could get a secured bank credit card. It will take, you have to have it reported to the Bureau 6 times for it to generate a score. I just know that because we pull lots of credit. So make sure you have a credit score. Sometimes, not all the time, it is a red flag for a lender if all of your credit is authorized user. So if you've been on your parents' credit cards for years through college, etc., it's great and all, but if you don't also have your own credit to stand on, the lender might, depending on your down payment, the lender might ask you to remove yourself from the authorized user cards, and we see what's left over. We kind of see the last cards standing, and we will have to recalculate your score based on that. So again, it doesn't always happen. If you put a nice big down payment, we really don't care. But if you put a low down payment, then that might be something that's required. So get to a lender sooner than later to see if that's going to be applicable to you. And then basically, let's see, authorized users, new credit, and then also, again, watch my credit video to see how to have the very best score possible. I talk about what's most important in credit, etc. So you want to have a score, at least in the 600s. There are all kinds of loans for people with scores, let's say 620 and above. But you want to have the very best score possible. So again, talk to a lender. Now, student loans, this is super important about your credit. So on student loans, there's two types of loans that are available, FHA and conventional. FHA stands for Federal Housing Administration, and conventional is Fannie Mae, Freddie Mac loans. So those are the only two types of loan that you can get. That's like 90% of the loans out there. FHA is not lenient. They're lenient about credit, but they're not lenient about student loans. So let's say you have $50,000 in student loans, whether they're deferred or not, it doesn't matter. We're gonna slap a 1% payback on your debt column. So we're gonna put $500. Even if you have an income-based payment that you can prove to us, FHA requires that we use 1%, so that's important to know. However, we want to get you to qualify for a conventional loan because conventional is more lenient. Conventional will, at the time that I'm making this video, they will recognize income-based payments. And so even if it's $9 a month, we will recognize it and use it. We just have to have proof from the creditor that it's $9 a month, okay? So if it's deferred and there's no payment yet, then we're going to default to the 1%. Okay, so that's super important to know as you're getting out of college and you're younger. We find that a lot of young people have student loans. So this is a really, really important nugget to understand. Okay, we're going to talk about work history. If you've just graduated or recently in the last 2 years, it's okay. You don't have to have the 2-year work history. Okay, as long as we can prove that you were in college through a transcript and or a diploma, then the 2-year work history is not a deal breaker at all. Other than that, we do want to see that you have cumulative 2 years it doesn't have to be at the same job. It can be multiple jobs, but beware, the lender will be suspicious and might be weary if you've changed jobs a lot. Like 3 jobs in the same year is a red flag that depending on the kind of loan that you get, may or may not cause some extra questions. So job stability is super important. The other thing with job that it's worth mentioning is that if we are going to use overtime, bonus, commission, 2-year history is required. Even though you have the diploma and you were, studying, etc., we do have to have the 2 years for that, okay? So we would only be able to use your base salary or your base wage. So again, it's really important to get with a lender quick to make sure how that applies to you. Okay, we're going to talk about savings. So minimum down payment as a first-time home buyer, you can do just as little as 3% down, okay? So you don't have to have a 20% down payment. Someone started that myth out there and it's just not true. So 3% down is the minimum. On a conventional loan, if you do FHA, it's 3.5%. And you can get the 3.5 or the 3% from several sources. Savings on your own. You can also get them from a gift from a family member or super close relation that has to be documented. So talk to your lender about that. Maybe you have a 401k at this point. I don't know if you do, but you can also use 401k monies, definitely. So you can borrow those monies from yourself. You just can't use a line of credit or anything like that. So talk to your lender about acceptable sources. Cash is not an acceptable source, so if you do have cash, then you need to deposit it right away, and we have to wait 60 days before we can use that as reliable funds for down payment. So I've hit the 3 main triggers: credit, work and income, and savings. Any questions, just call me. Happy to help. Good luck on your search, and we'll talk to you soon. Legacy Mutual Mortgage is an equal housing opportunity lender. The opinions expressed here do not reflect those of Legacy Mutual Mortgage.